Welcome to the Weekly Trend Trader, how to do trend following. As always, what we're going to do is look at the Asian markets, the European markets, and the markets in the USA. If you haven't already, don't forget to subscribe. If you have subscribed, thank you ever so much for your support. We really do appreciate that. And also to like this particular video and to share it with your friends, because you may have those who would like to have a part-time trading income, and the strategy that I'm teaching you here lends itself very well to that. Also, don't forget to switch on that notifications bell, because it's only by hitting that notifications bell along with subscribing that YouTube can alert you to the fact that we've uploaded the latest video. And obviously the information I'm sharing with you is time critical information, so you don't want to miss that. So go ahead and hit that notifications bell. Right, so let's begin our look at the markets by looking at the Asia region. And first we're going to look at the Hang Seng. The most important thing to a trend follower, which we're going to look at this week, is the closing price. So rather than look at a candlestick chart, we're going to look at a line chart with closing prices on there this week. And we're just going to see how that really points out to us and helps us with our trend following. So you can see why some trend followers only use closing prices of the market. So let's take a look at that together. So we can see here that the Hang Seng is in a downtrend, and it has been in a downtrend for the entire 2 years. Just a glance at the chart shows us that. But then there's some opportunities in this chart. That's where pattern recognition comes in. Look back to February and March 2019. At that level of 30,000, there we have that double top. From that double top, lovely little shorting opportunity, and the market drops all the way until the end of May, beginning of June. Look at another opportunity. Look at that massive head and shoulders. Look at the 29,000 level. There's your head. That's in January. Look at November 2019. That's the left shoulder. Look at February this year, 2020. That's the right shoulder. Then we've got a neckline that runs just under that 26,500 level. There's your neckline. That neckline breaks and the entire price collapses. The pattern was there. Lovely bit of pattern recognition. Opportunity to short this one that was already in a downtrend. One more on this chart. Let's have a look at March and May. March and May, 23,000 level, closing price there. We bounce in March, we bounce again in May, and we run all the way up to the falling 52-week moving average. Another little opportunity there. So that's the Hang Seng. Let's move over to China. So here's the Chinese markets, the Shanghai Composite. As we can see straight away from looking at the chart, most of 2019 and into the beginning of this year, the price action was pretty flat. Look at the 52-week moving average, very flat. The price action is just running right the way through the middle of the 52-week moving average. But what's happened in the last couple of months? Well, the market's run up. We've hit this level of 3,400. We came back after hitting that in July. We went up again in August, hit 3,400, and we've dropped back to that 3,200 level. So this market is kind of trading in a bit of a range between 3,200 and 3,400. Nothing really much there on this particular one because it's been ranging. When the market is trading in a range, 52-week moving average is flat. Nothing there for us. We want a nice rising 52-week moving average, consistently rising, or consistently falling moving average as trend followers. So that's the Shanghai Composite. Not much going on there for us. Let's look at the Nikkei in Japan. So here's the Nikkei. Look at this one, a little bit different on this one. So we had that falling 52-week moving average, and then a slight rise, and a slight fall again when we had the COVID sell-off, and then a slight rise. But look at the pattern recognition again. Look at that level of 24,000. We close in December right on 24,000. Market falls back a little. We go back again in January, close at 24,000. There's now a double top in place. Market falls, tries to get back to that level. It's a failure swing, and the market absolutely collapses with the slowdown of the economy and the COVID situation. Our line crosses, and we get an opportunity to short this one. That's a lovely opportunity to trade that double top pattern that we see on this particular chart. What's happening at the moment on this particular market, the Nikkei? It looks like it's trying to get back to 24,000 and retest that high. And if we get there, we'll see what happens if we do get there, and whether we can sustain and hold that level and break through that level. So that's the Asia region. Let's have a look now at what's going on in Europe. So to begin our look at Europe, let's look at the FTSE 100 in the United Kingdom. Look at the 52-week moving average through 2018 and 2019, pretty flat there. Nothing much going on. We do have those two levels there in June and July of 2019, where the market does a little double top at 7,500. And then again at 76.50, we have another little double top in December and January. That double top leads to a very big move to the downside. It's the COVID situation, so the market moves down, tries to recover. There's no buyers at 7,500. The price really collapses and falls all the way down to 5,200. A beautiful short from that double top pattern. Then what's happened? Well, we can see that the 52-week moving average is falling. We can see that any of the price action that we see, look at the closing prices here, we just cannot get anywhere near that falling 52-week moving average. Best we did was 6,500 back in May. Then we've consistently fallen. Again in July, we tried 6,300. We fell back. August, we tried 6,100. That's the best we could do. Market fell back. What's happening now? Well, the last couple of months, the FTSE 100 is trading between 5,800 and 6,000. 5,800, 6,000. So it's a tight 200-point trading range. Look at the RSI. Bearish bias on the RSI. Nothing there for us on this particular market. Let's move over to France. French market now. Look at this one. Lovely the way it bounces off the rising 52-week moving average. Look at the opportunity you get there in May. Both the RSI and the chart saying take an opportunity, a bounce off the 52-week moving average, the 52-week moving average, and a bounce off the RSI. Again in August, another opportunity. Nice opportunity there. And the market moves to the upside. Then we get to January and February, and we can see 6,100. The market closes there in January, falls back, goes back there, almost closes symmetrically at 6,100 again. What happens? Double top pattern, and the market sells off. Falls to March there, it starts to try and recover. The best the market can get up to is May, where the market gets up to that falling 52-week moving average. When it hits that falling 52-week moving average at 5,200, what happens? Price rejection, there's a sell-off, and the market continues to drop all the way back to 48.50. Market tries again, goes for it. In July, we can see there the best we can do is 50.50. The market drops back from that level to 4,800, has another go at the 5,000 level in September. The market continues to drop lower as we test almost drop down to 4,700. So we can see there, this market, the French market, the CAC 40, cannot get above that falling 52-week moving average. The market just continues to drift lower. Look at the RSI, pretty flat on this one, but it does have a bearish bias because the RSI is below the 50 level, which is a bearish bias. Let's move over to Germany now, the biggest economy in Europe. So here's the German market. As we said, the biggest economy in Europe. Look at this one. What's happened? Well, as we can see there, we look at that move that we had January and February, got the RSI almost giving us a double top pattern. Again, on the chart, it's very close to a double top pattern. We get that correction and the sell-off. Then the market recovers in March, falls to the oversold level of 20 on the RSI and a round number of 9,000. So whenever the market gets to round numbers, we get a lot of turning points at major round numbers. So the market sells down to 9,000. It bounces at that level. On the RSI, we're at oversold level of 20, giving us an opportunity to buy this one long. And we get a lovely move from the German DAX. From that level of 9,000, where it bottoms out, the market moves almost up to 13,000. Absolutely fantastic rally and recovery trade from that March low. But what's kind of happened in the last couple of months? Well, looking at the closing prices here, we seem to be struggling to close above 13,000. Let's have a look. May, we have a go at it. We don't quite get there. June, we get that a little bit closer to that 13,000 price. In September, we put our head above for a week and then we drop back. And what's happened this month of October, we've hit that 13,000 price and we've had price rejection. The market seems to be trading in this sort of range between 12,500 and 13,000. It just cannot close above that 13,000 level. When we look at things, RSI does have a bullish bias, but the fact that we're failing to put in higher highs says that there is some weakness here. Look at the RSI and the 52-week moving average, both bullish, but the market itself, the price action, is not making higher highs. So it's one just to be cautious of, the German market. Let's look at the IBEX in Spain. So here's the IBEX, the Spanish market. This has been in a downtrend for the entire 2-year period. Popped above a couple of times, but gave us a nice opportunity actually to short this one when it popped above. So we had that opportunity there in March. Market pops above and then drops back. And then again in June, the market hits the 52-week moving average that is falling, and the market sells off from there. Then the market rises through in September all the way until the beginning of this year. It's the COVID situation, slow down the economy. Market hits that round number of 10,000. Look out for that. Whenever we hit a round number, markets are prone to reversals at round numbers. So we hit 10,000. What happens? The market collapses from 10,000 all the way down to 6,400. At 6,400, have a look there at March and May. Clear double bottom pattern. Again, pattern recognition. March, May, double bottom on the chart. Chart does a lovely little run up from May, from that 6,400 level all the way to 7,800, where the market starts to reverse, and then we take our profits and get out of that one. But if we look at that 52-week moving average, it is still clearly falling. And look at the price action. The closest we got to it was in May. We got to 7,800. Then again, we tried to move up. We got to 7,400 in June and July. Market fell away there. We tried again in August. Best we could do, 7,100 on a closing price. Then our latest low was 6,600. And the market just continually seems to drift lower. Cannot get this market anywhere near that falling 52-week moving average. So that's the IBEX in Spain. Let's take a look at the FTSE Movespa in Italy. So here's the FTSE Movespa in Italy. Nice little example here. Market runs up quite nicely. Lovely couple of opportunities that we see there. But again, we see that situation where the market gets to that round number of 25,000 in February. Then we get that massive correction all the way from 25,000 all the way down to 15,500. Lovely trade if you caught it. 10,000 points on side, but that was a very big move. Then you can see, look at March, look at the RSI, is at the oversold level of 20. So we know that this one's going to bounce. It's seriously oversold. It's at the 20 level on the RSI, and it starts its recovery. It starts its recovery, goes trading sideways for a little bit during April and May. Then it pushes towards the end of May right to the upside to retest that 52-week moving average that is falling. And the best it can do is get to that level of 20,000. Then again in July, it gets to 20,500. August, it gets to 20,000. To me, there I can see a clear head and shoulders. The head at 20,500 in July. The left shoulder in May at 20,000. The right shoulder in August. Then the neckline's at 19,000, which we broke. Then we came back to retest. And now the market looks as though it's finding again some weakness and is about to drift from that 19,500 level back to the downside. Look at the RSI, pretty flat, but has that slight bearish bias. The market cannot close at the moment above that 52-week moving average. And if this is a head and shoulders pattern, then we've got some further downside to come. So if you're enjoying looking at these charts with me, you're enjoying my 20 years of trading experience that I'm sharing with you, then just give us a subscribe. It takes 2 seconds and you won't miss any of the powerful information that I'm sharing with you about how to ride trends in these markets. I know we normally look at candlestick charts, but this week I wanted to show you the closing price and why that's so important, along with pattern recognition. Also, don't forget to like this particular video, share it with your friends, and drop us your comments. Maybe you caught a massive trend. You got in when the lines crossed. You caught a big move that lasts 3 months, 6 months, 9 months, a year. You took a lot of money out of the trade. Drop us your comments and tell us the trades that you have won using trend following, long-term trend following. Excellent. Let's continue with our look at the United States. So let's go over to the region of the USA, and firstly we'll look at the Dow here. Look how clean this chart is. 52-week moving average in May, bounce there off the 52, bounce on the RSI, market moves to the upside. August, bounce off the 52, bounce off the RSI, market moves to the upside. We go all the way until January and February. We're at 29,500, round number, remember. Markets are prone to reversals at round numbers. There's the double top. There we are in February, 29,500. Market reverses, lines cross. We get our signal to take this one. We go short, and it's a lovely collapse as the market falls in the COVID situation all the way down to 19,000, 10,000 points on side. Then the market bounces from this one and recovers, starts moving again to the upside. We've got an inverse head and shoulders in March, telling us to reverse this one. It's a reversal pattern, inverse head and shoulders on the RSI, go long this one, and it continues to run all the way up until June, where the lines cross and we get an opportunity to take our profits. But what's going on now? Well, let's look at this pattern recognition situation. We've got in August, we ran up to 28,500, round number. Again, this month, we've got to 28,500, and what's happened? The market seems to be turning over. If we continue to drop from here, this could well be 28,500, a double top, and we could see another reversal like we saw in January and February. It's one to watch. We're almost there. The lines are almost crossed. got to be alert to the fact that this market is prone, because of news and geopolitical situations, it's prone to a reversal. That's the Dow. Let's take a look at the S&P 500. So here's the S&P 500. Let's look at what's going on now. Pretty similar. Look at 3,500. 3,500 market hit there in August, fell to 3,300. Went for 3,500 again this month. Didn't quite get there. Almost symmetrical. Almost at that round number again of 3,500 on a closing price. If the market reverses from here, there's your double top in place. You would short this one and the market could collapse, something similar to what we saw in February and March. So that's the S&P 500. Let's take a look at the NASDAQ. So the NASDAQ has had an absolutely amazing run. May, lovely bounce and entry point there. August, another bounce and a huge move up there. We've got a double top on the RSI in January and February. So after that huge move up, there's a double top January and February on the RSI. It's at the 80 level. 80 is overbought. It's telling us that this market is overbought. It's at the 80 level plus a double top. Short this one. The market reverses. It falls all the way to 7,000 where we start to bounce and recover. We've got an inverse head and shoulders on the RSI in March. As this reverses, the lines cross, we get in this market and we're long from the beginning of April all the way until September, where we take our profits. Absolutely fantastic trade. April, May, June, July, August, September. Fantastic trade. Patience pays in trend following. But what have we got going on now? Again, pattern recognition, like the other markets. Market, NASDAQ here, has run up on a closing basis. Remember, we're looking at the closing prices. It's the most important price for trend followers. We got to 11,600. Market dropped back to 10,007. Markets run up again. We've got to 11,600 again. And what's happened? The market has started to come off. Now, this week is going to be absolutely key for us to see whether the market can sustain this level and move higher, or whether there's any further weakness. We get that double top pattern in place and the market sells off. We could see another sell-off similar to what we had in February to March this year. So exciting time on the markets. Always have a look and see what the charts are saying on a closing basis. Now, I know I've shown a lot of things here and talked about a lot of things here, inverse head and shoulders and where to get in, where to get out, the lines cross. I've mentioned things that you might not be familiar with. I know we're not using candlesticks this week, so I'm going to show you a video on the strategy. It will use the candlesticks, the normal way that we look at things. This was a one-off, just want to show you something different. If you look at that video there, it's a strategy video. It will just help you to understand how we really do trend following. Look at that, and then as I talk and show you what's happening each week, you can build upon your knowledge and you'll be able to do trend following that way. If you like to do momentum trading, if you look at the other one there, that video is going to be a momentum trading video. Be able to watch that one and that will help you with that particular strategy, because that one is more based on stocks and momentum. If you have been watching up to this point in the video, appreciate your patience, appreciate your time. Thank you for watching. Until next week, take care. See you then.